Howdy. Welcome back to Dion Talk. The three of us, the three amigos, make content every week trying to help you understand that you can reach financial freedom in 10 years or less and make work completely optional, even if you're not starting from the best position. And we usually talk about the asset classes and the strategies that we chose to do that. But today I want to focus on the nuanced day-to-day systems that help us do it while working full-time, while having families, while living a life and having a work-life balance. So first, I want to start with my friend Michael Zuber from One Rental at a Time. And we'll cycle back through a couple of different systems. But what systems do you have in place to find your deals?
So to find my deals, it's probably the basic ones that everyone has, right? You first have to first identify a buy box. So again, I'll go back to what I've shared many times. 93703, 3 or 4 bedroom homes, 2 baths, between, I think it was 1,250 and 1,750 square feet. Why all of those things? Because even back when I started doing this 20 years ago, you could put that into an app and it would send you alerts. Mm-hmm. I mean, it certainly hasn't changed much for me. Been doing this a long time. Today, I'm sure you can get much fancier with that, but I had to sit down, figure what I wanted to buy. Once I knew what I wanted to buy, that's all I wanted to see. By doing it this way, I ignored everything else. And that's important for new investors. Too many new investors are all over the place, right? Even if they're smart enough to say, I want to pick a city, they're still looking at everything. You can't get intellectual capital. You can't get positive leverage by looking at everything every day. It's going backwards. So my first system was to get comfortable with what I wanted to buy, what I wanted to own. And then I only looked at that, and I looked at it every single day.
Okay, so you have your buy box and you look at it every day. So you develop a system for making sure you're checking it every day, make it a habit. Mm-hmm. Matt, from the Lumberjack Landlord, what kind of systems do you have in place to find your deals?
So much like Mike, it's pretty much the same. So we have the MLS side of things. We've also got a number of realtors and brokers that are kind of heavy in that part of the market where we buy. And so they know that I'm a dance with the one who brung you kind of guy. And so if they bring me the deal first, I always tell them it's not likely that you're going to be the only one that hears about this deal. It's likely others are going to. And so the faster you tell me about it, that's who I engage with. So it's really like the normal MLS that we see kind of every day. It's then some of the foreclosure sites and things like that. Just looking at, there's not a ton of, inventory there. So usually there's always 5 to 7 days and anything's going to be up for auction. So I'll actually look at that probably only once a week. Look at the, Hubzoo and US HUD and auction.com, Zome, look at those kind of 4 different sites. But yeah, outside of that, it's really just kind of daily MLS. And then I also make sure that kind of my top tier of realtors that consistently finds the most, that I'm talking to them at least once every 7 to 10 days. I just thought about this one. Mm-hmm. Glad I called you. And so we find a lot of deals like that. So it's really a matter of not only what the data set that you can set up, i.e. your buy box and having that data come to you, but it's also continuing to be out there and making sure that they know that you're still looking.
Yeah. Yeah. I would just want to add on top of that. The last thing to talk about is tell everybody what your buy box is.
Yes.
Right.
Yes.
This online app alert stuff worked great for 15 years. I would have gotten nothing from it the last 2 years, but I still did, 9, 12 deals, whatever it was, because everybody knew what I was buying. So once you have it, it's your job to figure out your buy box, but then you tell everybody, and you tell everybody, as Matt says, all the time. Yep. Like you call an agent, right? You shoot the shit for a little bit. Close with, remember, I'm buying in the Mayfair, or I'm buying in the Tower, or I'm buying in the, whatever it is. So yeah, that's where it starts.
I have a way this week that video is going to come out, and it is a game-changing way that will ensure that every agent you interact with knows your buy box.
Awesome.
Cool. So I like the top of mind awareness, making sure your network knows what you're looking for, and then reaching out to make sure that they're currently aware of what you're looking for and that you're still looking. My systems for finding my real estate is very basic. I'm literally vanilla as it gets. You have 3 different investors here. We are not wholesalers and we are not primarily flippers. So we don't have these massive systems of mailers and going to the county records to look for out-of-state tax liens and divorces and the probate listings. We're not literally trying to build this massive list of deals. We want a consistent source of properties for us to analyze. And for me, it takes 3 real estate agents. For some reason, searching on the MLS is nuanced. I only search on the MLS. So far, all my deals are from the MLS. I haven't done anything off market. So the wholesalers right now that are watching that have a deal that's so overpriced, you're embarrassed to put it on the MLS, please don't email me. I have those 3 agents with the exact same copy and paste email of this is my current search criteria, and I send it to them. In 10 years of investing, there was one time where within a 24-hour period, those agents sent me the same deal. So somehow when they set up their searches, they're very nuanced. And I like Matt's, you dance with the one who brung you. So the person who gets me the deal first is the one who gets the work.
Right.
If a property is on there for 20, 30 days, yes, they're all going to find it eventually. But I want within that first couple of days. So that's my system for finding deals. Multiple agents with searches. If I was an agent and I had full access to the MLS, I would still have at least 3 agents with auto searches set up. Uh-huh. So the next systems I want to talk about, this one's going to be, I think, a little shorter, but harder to define. How do you adjust your buy box as rates go up and prices go up? Mike, what have you been doing?
I'm only interested in buying great deals. How do I know it's a great deal? It's because I spend the time to figure out what average is. And as you look at it every day, you can see averages change, right? Like, for example, if rates go from 3.8 to 5.8, and nothing else changes, the yield in every deal goes down. Why? Because the cost of money goes up. So as we have gone through a shockingly rise in rates and in prices, we have seen yields fall, right? My average yield in my market falls, which makes sense, right? That's kind of how the math works. Mm-hmm. But here's the deal. I've been doing this a long time. I only want to do great deals. I made a declaration yesterday that might surprise people. For the last 2 years, my market average has been 6%. So I would do any deal 7% and above. I'm in Fresno, California. It's no secret. It's a tough market. Yesterday, or it might have been the day before, I've actually raised my average to 7%. So I will only do now 8s and 9s. Why? Because I don't need to do every deal.
Right.
Mm-hmm. I'm in a market where I know with 100% certainty, the more offers I write, the better chances I'm going to find the motivated seller. I am going to write offers below asking. I am going to write offers no longer at 7%. They're now going to be 8s and 9s because I only need to do 2 or 3 deals this year. And I've been doing this long enough to know that there's going to be some sellers somewhere that needs out and I'm the only party. So I have actually raised my minimum yield expectations in an environment of higher rates and higher prices because I am fishing for motivated sellers. I don't need every house to crash 20%. I need one house to crash 20%. So it might surprise people, but I've actually raised my minimum expectation in today's environment.
It's one of the reasons why I wanted to make this video. I saw your video where you were raising that expectation, and I was thinking, what system did you use to make that decision? Which is what we're hoping everybody watching does. We don't make a buy box. This is the percentage I will offer on. This is the only yield I'll go for. We do the work every day to recognize what happens to that average, whether it goes really high or really low, and then we go for the deals that are great.
Yeah. So my yield in my market, because I've been doing this 21 years, has gone as low as 6%. So the last 2 years I've been in, it was the lowest I'd ever accept. I won't, if my average for whatever reason went to 3% just for grins, I wouldn't do a deal. I'd pay off debt because my debt's higher than that, right? Not much higher, but it's higher. On the other side, it's gone as high as 15%, right? There was a time where the average deal in my market was 15. So I was doing 20s.
Yes.
I wish it was there again.
Yes.
My wish doesn't mean squat,
yes.
But yeah, that was a good time.
All right. And Matt, do you have any systems in place for changing your buy box or your expectations?
Yeah. So, I mean, so much like what we buy is what we buy. However, with having as much dry powder as we've acquired and, rebalanced the portfolio and gone through, I recognize that the opportunity might be there to buy a really impressive large asset. And so I just don't know what that looks like. I'd like to nickel and dime and buy 2s, 3s, and 4s all day long till the cows come home with returns in the 20s. That's where I want to be self-managing. I want returns in the 20s. the last few deals, they've been on streets that I won't buy on. They've been, so dilapidated, or they've been perfect, and the price and rate have reflected that. And so it's so skinny at that point. So I just look at it and say, just like always, it's always a good time to buy a great deal. I continue to just watch the market. So from my side, it's really having more patience. I'm a deal guy. I like to make deals. I like to close deals. It's fun. I like closing at that closing table. I have a chair at that office with my name on it. I close so often. Yeah, we close a lot there. But here's the thing. I'm not getting nuts. It's about the deal. And one of the things I think a lot of people say, I've been going for 6 months or 12 months. You only need one. You only need one. You're not, even if 3, I always tell them, what if 3 came available today? All you're going to do is pick the best one. You're still not buying all 3. So for me, I'm still hunting. I'm talking to wholesalers. To your point, Dion, some of these wholesalers with their numbers, they might as well be real estate brokers because they are charging above market.
Okay, so we have systems to find the deals, systems to make sure that we're buying the right buy box and looking for the right yield. This is the one where I think we're going to have 3 very different answers. Mike, what systems, because you're either managing your property manager or you're managing your tenants. What systems do you have in place that makes it easier for you and more likely to add units to manage your properties?
Of the 3 of us, I'm the only one with a property manager. So, I pay a property manager 6 figures a year to manage my portfolio, which is profit to you guys. But thankfully, that means I get my time back. So I get a daily report of rent collections and expenses daily. It's automated. I get to compare it. It's automatically in the report. I compare it to last month, so I see trends. I get a scheduled set of reports about when tenants are late, right? Late payments. We're notified about any expenses over certain dollar thresholds. We usually talk once a month, right around the 20th, 18th to the 21st, depending on weekends, about where we sit with the portfolio, collections, expenses. We have a portfolio of size where we actually make capital improvement decisions. Because again, when you get to a certain level, you have so much income that you don't want to pay the IRS. So you make capital improvements. So we've made decisions to, add windows to new apartments, 50 new windows. We've put on new roofs. So we make, we're playing chess on a board. I love what I have now. The system, the team, the people, I love them all. It took a decade to get to this point because you're always turning and twisting and exceptions. And yeah, I mean, the daily report, I get at 4:30 every day. I look at it for 5 minutes. And again, I love how it compares to last month, and it's enjoyable.
That's more fun than work.
Oh yeah, for sure. Yeah. But again, I'm paying for it, right? I'm not confused all the time when I hear your guys' cash flow number, and I'm like, well, I could have a pretty big one too, but I keep paying those other people 6 figures.
Yeah. You're buying time.
Yep.
Buying time.
And Matt, you self-manage.
Yep.
Last I checked, 115 units. That sounds like it's changing with this deal.
It is. It is, and it did, or it will. But yes, 150 right now.
What are your systems in place that you have it to make it easy and more likely for you to want to continue to add units?
So Tylenol Tuesdays, Excedrin Wednesdays, Advil Saturdays. No, mostly it's largely the big thing that we had to do was make the jump this year to a real property management software. And so we spent about 9 months reviewing 6 different packages. I'm in the software industry. So I, basically would talk to Ashley and say, this is what you need to be evaluating. A day-to-day workflow, a day-to-day work request, getting a tenant in, these are the processes that we have to make sure that we kind of have it down pat. After a lot of review, a lot of conversations, the one that had the best suite of everything based on our size was a product called Door Loop. Phenomenal product. It's a super easy portal for our tenants. They got a notification email and a text message saying, hey, if you ever have an issue with something maintenance wise, fire, flood, or blood, give us a call. Outside of that, send us a text or put it in the portal. Everybody has talked about how they love the portal. It cost me $2 per person to pay in the portal per month. But we automagically have tens of thousands of dollars show up in our account the first few days of the month. So the real game changer for us was going from no real system to a real system. But it's because we basically doubled in size. And so we know all of our tenants by name. We, set up group text messages for all of our tenants. So that way we're not notifying one person that's then didn't tell the other roommates and then they have to text us back. So group text message, you fill out the request in the portal, you make payment through the portal or through some third-party payment software. So we're drastically reducing our friction point for management when it comes to actually managing the portfolio. And that's to the tune of about $200 a month is what that software costs based on the 115 units, but they don't charge us any more up until 200 units was the deal we negotiated. So if you're negotiating with them, you can get it basically down to about $1 a unit. So that process alone, we still have a number of tenants that send us checks. And so that's the thing that we have a lot of onboarding that we're still doing of tenants saying no longer send checks, do it this way, either a routing or something like that. Because even if it costs me at the end of the month, it costs me $50 to get all of my tenants to pay on time, it's pretty easy. What's been a dramatic increase has been the number of tenants that pay on time and early. That's been fascinating because we just set up the little setting that says, hey, it's the 3rd. We still haven't gotten your rent payment yet. Your late fees are starting to kick in. I don't have to manually do that anymore. That was something that I would go through and say, hey, do we collect everything? So yeah, I think it's really automation of the organization has made things a whole lot easier. It also makes it easier where I can literally create logins for all of my vendors. And when there's an issue, the tenant enters it in the portal. I can literally assign it to the vendor and they can click on the link and see it and let me know this is when I can go take care of it. So it's really allowed me to essentially manage the entire company from my phone.
That's brilliant. And so what I really like is Mike with a property manager and Matt self-managing. You found a system with a lot of units to make it work. Here's the thing I want people to understand. There's 3 different investors here with 3 very different ways of doing this. Here are my systems, and this works for me because I actually had different goals. I don't want 100 units. I don't want 200 units. I have 16. I don't even know if I want 16. I want the cash flow that bought freedom to where I can just travel and go and spend a month or 2 in Florida and scuba dive and try to spend money so that I have less money when I get home than what I'm going to. And I'm happy there. So the systems I use to manage my rental properties are, I have no software. I collect rents in any way that makes it easy on the tenant. So Zelle, Cash App, Venmo, PayPal, check, ACH, as long as it leaves a paper trail or an electronic paper trail and saves me a trip to the bank. So that's very simple.
No cash.
I have once in a rare while, and I'll actually give a receipt. I have receipts from my other job, but I'll give a receipt. It's super rare when that happens. I don't like to receive cash. I don't like to receive cash because it takes a trip to the bank. That's the thing I'm trying to avoid, more so than I have a problem with cash. But I have 2 handymen that once I've done a few projects with them, they have access to the tenants. So when the tenants have my sink is loose, my whatever is problem, they reach out to the handyman. Handyman has a threshold of $500. Anything above that, they have to verify. Anything below that, they just bill me. Develop that relationship over time so that we have trust. I use the Thumbtack app to find contractors, get quotes, and read reviews so that whenever I have a bigger project to be done, easy to find a contractor. Eventually, I develop a relationship with an electrician, a plumber, and a roofer. But my first 1 to 5 years, it felt like a full-time job to manage 1 or 2 tenants. Like it took a while to get these kind of systems in place to where I can rattle those off in just a few seconds. But what I'd like to do is someday I want to make a video, one-on-one with Mike, one-on-one with Matt, where we compare the trajectory of the first 10 years of my investing versus the first 10 years of your investing.
Oh,
but not today.
I'm down for that.
Because ultimately at 20 plus years with the hockey stick growth, you guys are doing exponentially better than I am with the goal of growth.
Yeah.
With the goal of freedom, the people that are watching, like literally go pick up a copy. The Audible will be coming out soon. I just finished chapter 5 and uploaded that. But in the first book, 1 rental at a time, get to 4 properties.
Get to 4.
That's the goal. Get to 4. You don't need hundreds. You don't need 16. That's the step to freedom, that where life just starts to change. That's when the income snowball kicks in. And when you get to 4, it's really going to help to have systems like this. How did you find the deals? How did you keep on top of making sure you're getting the right deals? And then once you have them, how do you manage them in such a way where it's easy enough for you to want to continue to add units? I want to thank you both for doing this. Mike, if people want to reach out with questions, how can they get a hold of you?
One rental at a time, YouTube channel. And I go live Saturday mornings, 8 a.m. Pacific.
And Matt, the Lumberjack Landlord, how can they get a hold of you?
Lumberjack Landlord on YouTube and on Instagram at 11:30 a.m. Eastern time on Sundays. We have our live stream.
Thank you both. Until my next video, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.
And I'm going to have to edit because my brain shut off. What were we talking about?
Systems, process.
There we go. System. Okay. Sorry. There's an outro.
Hey, you're taking us down a different track when you started with assets. I was like, he said, well, we're going down a different track. We're talking about those Facebook posts.
Right. Oh, yeah. We might cover that another day. We might actually, yeah. No, I want to cover that myself because it's going to be a bunch of bad stuff you guys don't want to be associated with. Or Mike doesn't want to be associated with. Right? Exactly. Here we go. But today, I want to focus on the nuanced day-to-day. What is wrong with my brain today? Like systems. Jesus. Okay. Sorry.
We're good.
I'm so glad this happens when I'm doing it and not when I'm doing something for Mike. Sorry.
But I promise you, I spend less time a month in my portfolio than you guys probably spend in a week. It's
I'll take that bet.
Yeah, I think myself. So let's see. I'm going to be fair, right? So let me add Olivia's because she does the GL stuff. I would say we're 4 hours a month, 4.5, 5 hours, maybe 5 hours a month.
So today's we're recording on what? Thursday the 28th. Say the date. 28th. Here's the total amount of time I've spent on my rentals in this month. This is March, right? April. This is April.
April.
5 minutes to deposit one check because I have a tenant who gave me 12. So every month I deposit one with an app.
Yeah. Yep.
And one text to a tenant to tell her she doesn't need to pay rent next month because the housing authority messed up and overpaid. Oh. That's it.
All right.
Total.
You win.
And that's almost an average month. Once a month, I'll get a handyman saying, I went and fixed a window. Here's the bill.
Okay.
So, but again, I have 16 units compared to
I have
hundreds.
a lot more than that.
Right.
I have more than that.